So today, Matt and I are going to be showing you guys how to raise $1 million or more in 90 days or less. We're going to show you step by step on how you're going to be able to do that in the near future.
So this million that we're going to give you guys the technology on how to do it for may not be your first capital raise, or it may be. Either way, we're going to give you guys the tools that you guys need. This is out in Lancaster, Pennsylvania, guys. That's DeRosa Capital 7. We raised $1 million for that deal. One of those old converted factories that used to be a factory, and then somebody came along and turned it into an apartment building. We bought it from that developer, but it's a great asset, and we bought it for $3.2 million, raised $1 million to go into it in investor equity. It took us 3 months, a lot of scrap, a lot of head knocking, a lot of turmoil, but we got it there. And then most recently, Hoan, just a few highlights. We raised $4.8 million about a year and a half ago in 2 weeks. And then another deal that we did that Hoan and I did with a larger team as well, we raised $21 million in 2 months. We're showing you guys these things to show you what's possible. This is not because of bigger pockets. This is not because of our YouTube channel. This is not because of anything else that we've built that's outside of direct raising capital. This is because of the technology we're going to teach you guys today.
$1 million or more in 90 days or less is by showing you guys a 90-day plan that is broken up into 3 parts. Their first day to 30 days, 30 to 60, 60 to 90. What is the biggest mistake that investors make when raising capital?
They build their investor base first. That is the biggest mistake folks make. Yes, you don't want to sell before you have a deal, but what you do want to do is you do need to introduce your base of people that like and trust you and that maybe have capital to invest in your deals, that you are a viable source of real estate investments. You need to begin the conversation with your base before you have a deal. The biggest mistake I see capital raisers make is going to their Uncle Charlie, their Aunt Susie, or, posting it online or whatever, once they have a deal, and to begin the conversation with their investors when they have an opportunity. You need to begin the conversation with your investor base well before you have that opportunity, because unfortunately, the market that we're in right now is not going to wait for you to raise the money. You have to have the machine built of interested investors that are ready for you to have a deal before you have a deal, Home, right? Yeah.
All right. So let's go into the first 30 days. This is what you guys are going to be doing. You guys will have a property that you guys have submitted an LOI on, and now it's time to actually consider, hey, how do I actually fund this thing? When it comes to raising money in a syndication, these are the numbers and letters you guys need to know about. When raising money from a syndication, that's where you're a general partner and you're raising from limited partners. And these limited partners are the people who are bringing the money, but they will not have a say on how the project goes. They are not telling you what paint color to paint the building. They are not telling you when to buy or sell the building. They are not telling you to do anything. They are saying, here is money so that you can complete the business plan that you guys have laid out in front of us. So 506B, 506C, this is how you're going to do it legally.
506B says you can raise a certain amount of equity from your investor base if you raise it from people that are in your immediate network, people that you know, people you like and trust, your Uncle Charlie, somebody you went to bowling with, somebody that's your next door neighbor, somebody you went to high school with, whether they're accredited or not.
So on this team, you guys will see, and it's not labeled, but on here, we have people who find the properties, manage the properties, who raise money for the properties, also our board of directors and advisors for the team. They do underwriting and so on and so on and so on and so on. Your job is to figure out who you need on your team. We broke it down into 4 main categories, and we call these your real estate superpowers. There's the hunter, the brain, the money, and the hammer. In addition to finding a team and putting that all together, we're going to need a business plan. All right. And what that plan looks like is it's going to be structured as an OM.
From memorandum. This is the full, hey guys, this is what we're going to be offering up to you. This is what you can invest in. This is the A to Z offering that you put in front of investors. FOMO is a real thing. FOMO is not just the person that lives down the street from you. FOMO is a real thing, the fear of missing out. And FOMO plays in marketing. It is a real thing that you guys can use to generate interest and investment in your deals. We have an offering. Here's the link to register. Going to tell you about it later. And you send an email out a couple of days later. By the way, that offering I told you guys about, I've already gotten 10 phone calls about it. And that's it.
Right.
That's the only thing you say in the email.
So that's why we call it a teaser campaign, because you're just teasing the fact 30 days is up. This is typically when due diligence period's over, would you say, right, Matt? This is when you're like, okay, I got all my numbers. This is how much it's going to cost, which tells you how much money you need to raise. Now it's time to actually start raising and start hosting the webinars that we were talking about.
The true process of raising the capital. And I've built our business plan, built our offering memorandum, built the machine, and gotten people excited. Now it's time to get going.
It's now, after due diligence, 30 to 60 days, now we're going to host a webinar. So what do we talk about on the webinar, Matt?
These are the 4 questions you guys should be answering on a regular basis when people want to consider investing with you. Why should I invest in real estate at all?
That sounds like a pretty basic question, right? Like, why? Why would anybody want to invest in real estate?
You guys all read 1 million books. You guys all love real estate investing. Here's the thing. Not everybody read that book. Not everybody even knew real estate investing was a thing. And they still believe that Wall Street is their only way to wealth, Home. It is our job as real estate operators to educate our cash provider base on why real estate, whatever market you guys have chosen, like tell your base why that town. That's why I've chosen to make my mark there, right? So why the deal? Why that apartment building? Why that 10 unit? Why that 4 unit? Why that whatever it is? It doesn't have to be a 300 unit apartment building. It could be a 10 unit apartment building or a 2 family or 2 single family homes like it was for my first deal.
And if you can't answer this one, then maybe you shouldn't actually invest in it at all.
Yeah.
So
Right. And you need to be prepared to address that. Well, because my team has this and, diverse education backgrounds and different diverse skill sets.
So let's go deeper into these questions. So
let's talk about why real estate, Hoan.
Yeah. Why real estate? So here's a big one. Here's a big one that a lot of people don't consider, that your investors, when they give you money in a syndication, they are actually part owners of that property. They actually own the property, which means that they get the tax benefits of the property. Newbies invest in real estate for the appreciation, and professionals invest in real estate for the depreciation. And depreciation is a tax benefit. And that's what this slide shows you guys, that there's a typical depreciation on a building, 27.5 years, but we can also accelerate that depreciation using something called cost segregation, which breaks out the building into 5-year and 15-year items. And that allows you to get a much larger tax write-off without actually having to spend money on the expense.
Yep.
So in this case, in this example, we're showing how you invest 100K into the investment. And what's crazy is you're going to show a loss of say $35,000, $45,000, $55,000 in the very first year. Even if the property makes you money, you're going to show a loss. How great is that?
Show me a Wall Street investment where you can make money in your pocket as a passive investor and show the IRS legally that you lost money. You guys need to understand this thing like the back of your hand so you can explain it to all of your investor base. And if you guys are here, you guys have already drank the real estate Kool-Aid, you get real estate's a great place to be. Write a 10 item or even 5. You can't think of 10, write 5 reasons why real estate investing is a phenomenal investment asset that everyone should hold in their portfolio. And then teach it to people that are not real estate students like you are.
When you're doing this syndication model and you're raising money and they're limited partners, right? And they're limited partners, they don't actually have to do anything, including deal with toilets. So that's a beauty for them. They get to invest in the real estate without dealing with anything that people picture when they hear real estate.
So why that city? And this is all public information. This is data on Lexington, Kentucky. These are some reasons why we love Lexington. Population, percent of households are renter occupied. You don't want to be taking your investors into a city that's primarily occupied by homeowners. You want there to be a good rental base because these are the folks that we're going to be catering to. That's our community, right? Those are our people. Average median income. The income to rent ratio is a very good spread. That means that most people that live in Lexington compared to what the rents are, the average rent in Lexington that we see is somewhere around $1,000. So that means that most people that live in Lexington can easily afford to live there. I like that a lot. What we do at DeRosa when we present things to investors, they want to know what's around the property. Like if you're talking about why that property, I want to know what there is around it. So here's a map, handy dandy map we generated just off of your good old friends at Google Maps here. You can look down the line. Some say, oh, well, okay, Starbucks, Chipotle, Chick-fil-A, those kinds of things are all good assets. Walgreens are good assets to have around a property so people can know where they can go to shop and go to get something to eat. You know what else I see, Hoan? When I see all those little green and when I see all those little red and yellow dots there, I see jobs. DeRosa provides blue collar housing. Starbucks is paying 18 to $20 an hour, Hoan. Do you know that? You can afford to live in Lexington Villas right there. Those are assets for people to use when they want to go shopping. That's also could be jobs.
Why the deal?
Because we love the location, as I showed before, but also specifically because we've got a great business plan around it. And this is you guys letting your investors know we're going to renovate these apartments and increase their rent. And it's okay because these properties all around it, we've done our market research that we can increase rents, because everybody around this property is all charging, $100 more, something like that. We're going to give the tenants a bunch of amenities, a bunch of benefits, and then we're going to charge them for those amenities so they get a better lifestyle.
So if you guys go on different websites that allow for reviews, you can find reviews on apartment buildings. And if you see a whole bunch of people complaining about management, then this might be a perfect opportunity to take over this property and put in better management. This is both a way to find properties, but then also a way to increase the value of a property just by doing better property management and taking care of the people who live there.
You got a deal. Now you guys need a tool to sell to investors, right? And it's not my book. What is the best vehicle? Once you've got a bunch of folks lined up, how are you guys going to sell that? The answer here, guys, and we've already alluded to this, guys, is a webinar. And that's because you want to do a webinar. You want to be able to do Q&A. And above all else, guys, you want to be able to record that webinar so that you can use that webinar data. You can have one-on-one conversations with 30 investors, or you can do one webinar in front of 30 investors and then record that webinar and show it to another 30 investors.
Have a webinar.
Do the
Record
tease
one.
campaign to get people to your webinar. You should have the offering memorandum ready, maybe like 2 to 3 people presenting a webinar for an offering that you have, just to show you've got some depth in your bench. Present the full offering, talk everybody through it, try and keep it brief enough. I've seen people do a 2-hour investment webinar. That's a snooze fest right there. Use your megaphone appropriately. This megaphone that we have that you guys have built for us, it's our social media, our newsletters and that kind of thing. So use those things appropriately to bring people to that webinar so that people can register for it, sign up for it, hear about it, grab the recording if they missed it, that kind of thing. Have some credibility. That means it's important to state that you know what you're talking about. Make sure that you're very clear that the business plan is going to happen and it's going to work. And have a call to action. You can't just have a webinar and say, hey, give us a call if you want to invest. Nice to meet you. Done the teaser campaign and gotten lots of folks out to join your webinar to hear about your deal or whatever it is. You're going to have strong interest in your offering. This deal is not going to be around forever. You need to take action sooner than later. And this is what you do. Like, you go and make a soft commit. Hoan soft commit is just saying, hi, I'm Hoan Thai, and I'd like to invest in that deal. I think maybe my checkbook is not in my hand, but I know where that checkbook is. And if I get my questions answered, I will invest in that deal. The reason why you guys want to take soft commits is because asking folks to commit like 50K, 100K to your deal, whatever it could be, is a major commitment to them. Right. And we don't take that lightly, and nor should you. And so you should allow people to have a one-on-one conversation with you, but you need to separate those that are truly interested in your deal, that would like to invest, from those that are going to pass for one reason or another. You got those soft commits and you can schedule phone calls, get them to a yes or a no. Either way is fine. I love yes. I love no. Maybe is the one that really bothers me. Right? Record the webinar, as I said, but schedule 3 webinars. A little tip on scheduling webinars for the future, guys. Have the 3 webinars you're going to have on your deal catered towards different investing desires people may have. Maybe have one strictly about tax benefits, have one strictly about why the market you're investing in is amazing, and have one just talk about the basics of real estate investing and how that deal can help people that really want to manifest the joys of real estate investing they can get as a passive investor out from that specific deal. These are all the attendees for your webinar. Use technology like that. Use Gary Vaynerchuk technology. Use any kind of marketing funnel you want to design to have people to just not to sell people anything, but to help you figure out who's interested and who's not. Whatever sales funnel tactic you want to use, that's how you want to do it to manifest the dollars from your deal. We use InvestNext, right? And InvestNext is able to help people do soft commits, sign their documents. We do regular investor maintenance through it. Here's a way to do it for free. You can raise money for free, pretty much.
So what's that? That's like a Google form, and you send that out to them, see if they're interested. Then you get on the phone with them, and then they say, yeah, I'm in. You send them a DocuSign, you email them that DocuSign, and then you get the money.
You can make Google Docs talk to Google Sheets. You can leverage a lot of these things to make them talk to each other and everything like that. So Hoan, we've done the webinar. Houston, we have a problem.
Yeah. We don't have enough money.
We don't have enough money. We still got to close though. Option number 1 is to break out the handy dandy megaphone that I've already taught you how to build, get more people and do another webinar. I cannot tell you how many times this has happened for DeRosa. That happens, right? And that's okay. Or make some calls. Call people that said yes and say, hey, why'd you say yes to the deal? Like, oh, I love the tax advantages. I love that you're cash flowing day one, whatever it is. Oh, I really didn't mention that to my investor base. Let me do another webinar that highlights those things that you like. Now, here's the really courageous call you got to make, Hoan. Call somebody that said no. Well, I didn't like that town. I didn't like that offering, or I'm a little late right now, whatever. Those are all fine. There may be a misunderstanding, but you're not calling them to try and convert them. You're calling them to either dissolve a boundary to understand what it is that made them say no. And maybe you convert, but more likely they give you feedback. Take that feedback from the people that said no. People that say no to you can be the absolute greatest teachers in the world.
Day 60. So this is the final stretch. Let's talk about what happens here.
Once you're in the conversation, stay in the conversation. Find excuses to send emails out. Hey, we did our physical inspection and only found 2 leaking faucets out of 30. Great. That'll be an easy fix. Yay. Whatever. Find a reason to constantly email those that have said yes and those that haven't committed yet. Right. Do not stop communicating with your investors, right? Keep the emails going. Make people know that, hey, almost there, almost there, almost there.
What if you're still short?
What if you look like that guy?
What if you don't have enough money? What to do? Well, I think we have a couple of solutions, Matt. So what are these solutions?
And it's only because I've been there, right?
Right.
We ain't perfect either. Typically, this is actually not a hobby, buying multifamily apartment buildings. This is actually something we get paid to do. The fee is typically something that a syndicator takes when the property closes. That fee can get either deferred, meaning like we're going to hold it till the end of the deal, or hold it till later, or we're not going to take it right at closing. So you can reduce the amount of money that you need to close, so that fee can get pushed off, which we've had to do. We've had to defer fees until the end, until later. Or Hoan, you got to bite the bullet, take out a short-term loan with yourself as the guarantor. We've had to do that too. If you need X amount of dollars to close the deal, you can, You don't have to stop your capital raise once you close. That is a common misconception. You can own the real estate and still raise for it after you own it. We've done that many times. And that's, you could go and produce a short-term loan for a little bit of money just to get you across the closing line. And then you raise the rounding error residual afterwards. What's more important? You make an absolute that makes money for yourself, making it rain, getting you a big fee, making this happen, or getting the deal closed and moving forward, right? Which one is it? We tend to play the long game here at DeRosa. So I believe the long game is way more important than your closing. The closing is important. You want to take care of your investors and everything like that. But I have definitely put my investors and the long-term business plan well ahead of what my needs are. And that does pay off long-term. If you like this video, here's a few more you might like too. Thanks again for watching. Make sure you subscribe and like this video.